welcome. You're watching Money, Money, Money. I'm Sumaira Abdi. Clearly, all eyes are now on when the Reserve Bank governor will pull the trigger and announce a rate cut. All indications are that a rate cut could come as early as the first quarter of the new year. So what should be the investor's strategy in this scenario? Whether you want to invest or borrow, how can you benefit from a scenario of falling interest rates? Gaurav Mashruwala, a certified financial planner, joins in to explain how best to position ourselves. Hi Gaurav, thanks very much for joining in. First up, I want to start with talking about the borrowing part, because there the effect of a rate cut could be almost immediate. For someone who's looking to take a loan sometime now, should they defer it till the rate cut is announced?
So this depends for what you're borrowing. I mean, if you're borrowing because if there's a necessity, then that leeway is not there. I mean, if you have to fund a son or daughter's education and you need money, you don't have that option. If you need money to kind of treat somebody in hospital, you don't have that option. So in that case, it doesn't matter. You need money, you pick it up. If it's luxury, and which as a planner will say never ever do it, but if that's happening, then you kind of delay it perpetually and never borrow.
So what kind of a category would like a home loan or a car loan fall into?
So if it's a home loan for a house to live in, if you have found a dream house which is meeting all your requirements, pick it up. But if it's like I want to redo my house or I want a luxury home, hold on to it. Similarly, if it's a vehicle, whether it's a two-wheeler or four-wheeler, and that's going to increase the efficiency of your working throughout the day, you need to visit a lot of places, go ahead and do it, pick it up. But if it's like I need a luxury car, I'm going to upgrade it, hang on to it.
I know, I take your point actually. So everything that would perhaps fall into also the category of a personal loan could be avoided. But for someone who's looking to take a loan or needs to take a loan right away, would you suggest that they then take it on the floating rate of interest to try and sort of benefit from the fall later?
So that will happen in case of a housing finance, home loan. That usually what we have always suggested is that if your borrowing period is about 5 to 7 years, you may be comfortable with fixed rate because you don't want to go through the cycle. But if it's beyond that, please pick up a floating rate, because in a decade, we would witness 1 or 2 interest rate cycles. I mean, the way we witness 1 or 2 equity market, stock market cycles, we will witness. So if your tenure is longer, then floating rate is what you may want to pick it up, because then you will get benefit of both falling and when it rises, so be it.
Yeah, that's important to remember actually, because it's not just the next rate cut which is going to affect your loan. If it's a 20-year period, there's very well a possibility that rates could go higher once again. But on that note, one of our viewers, Kalpesh Sharma, has called in with a question. Hi Kalpesh, what can we do to help you?
Yeah, hi. I was planning on taking a home loan in the next few days so that I could start availing the tax benefits from this financial year itself. But now basically that the interest rates might fall. My question is that between the tax saving advantage and the monetary advantage from the rate cut, which will be better for me?
Gaurav,
sure. So Kalpesh, here it is. Never look at from tax benefit perspective, because A, if you need money, you need money. Second is, if you're looking at home loan, it's not a question of 1 or 2 or 3 years. We're looking at, even if you miss a tax benefit now, you'll get it next year, a year later. So as I said earlier, if you found a house which is meeting all your requirement and you are going to be borrowing for sure, which means either you have paid all your contribution or that contribution is going to take some time before you get it, go ahead and pick it up. If you have the option of delaying, I would encourage to delay, because that much lesser interest that you pay. So it's case to case basis. Same in case of Kalpesh. If you can defer a little bit, by all means go ahead and do it. If there is no option, pick it up, because then even if it's a floating rate, he may get some benefit or something or the other.
All right, Kalpesh, so clearly, I mean, everything has to be aligned to your goals. You cannot go for a purchase as big as a home based just on a tax saving or the possibility of one rate cut. Another caller is on the line with us. Sujata Kumar has called in from New Delhi. Hi, Sujata, what's your question?
Hello. See, my question is a little difficult for me to understand. What is the relationship between RBI rates and base rate of banks?
Okay.
And suppose if RBI rates are cut, are the base rates automatically cut?
Okay, that's actually something that a lot of viewers, Gaurav, call in to ask about. What is the relationship between base rate, lending rate, as well as the RBI rate? I mean, how does it work for them?
So one is, normally when we read in newspaper that RBI has cut the rate, it could be a cut in either CRR or SLR. I mean, there's bank rate, but that has been tinkered for quite some time. So these are the things which will not affect a common consumer directly at all. This is something where either RBI is borrowing money from banks are lending, RBI are borrowing, and the rate of interest RBI pays, or the amount of money that the banks need to maintain with the RBI and the returns they earn. So that's no way affecting a common consumer. Base rate is a rate at which, or that rate plus something is at which bank will lend to a common consumer, may it be home loan or a car loan or whatever. So base rate is what a common consumer should be concerned about, and base rate differs from bank to bank, and most banks will reduce the base rate at some point of time or the other sooner, the moment there is certain amount of reduction in SLR and CRR. So yes, RBI rates do affect them in some way, but there is no direct linkage, as in it's not linear. This happens, so this will happen automatically. There could be a time gap. Some banks may just hold it on. Sometimes it's market driven. So depending on what competitors are doing.
And sometimes it's market share driven. So a lot of the smaller banks are the first ones to cut rates to try and capture that market. Sujata, I hope that answers your query. But Gaurav, if the rate cut is substantial, as is the hope, does a borrower have the leeway to try and renegotiate his rate of interest at that point in time, or should they refinance their loan? What are the alternatives?
So here it is. If it's a floating rate, ideally banks would reduce. The thing is, you may have to do some follow-up calls, because bank will take its own time to do that purely in their interest, and they'll kind of defer it as much as they want to, number one. In terms of shifting to other financial institution, take that call, because shifting would involve costs in terms of another processing fee, admin fees, if there are any prepayment penalty. The home loan and all, most of them have done away. But if these are the costs, then you will have to factor in those and then take a call whether the entire shifting is saving you substantial amount of money or not. So it's not blanket, but look at these 2-3 things: admin cost, or processing fee cost, or upfront cost, and if there are any penalties, and then take a call. Look at these 3 parameters and then take a call.
All right, but review it for sure.
Yeah, absolutely. Absolutely, please do that, because it's going to save you. In fact, I've seen instances where they delay or they are lethargic about it, and it could mean couple of thousands of rupees if your loan amount is substantial. So don't let that go.
All right. So be vigilant about your loan. Try and speak to your bank if and when there is a rate cut. But let's take a break on that note. We'll come back in a bit. When we return, we'll talk about the other aspect that's affected by a possible rate cut, and that is your investments. Stay tuned. We'll be back in a bit.